Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the daily market analysis show, where we look at what happened in the market during the day and how we can plan for a better trade tomorrow. If you're not subscribed, please subscribe and share to your friends and colleagues. Thank you. So it was a gap up day today, right? But the banks seems to be stuck at the gap. Let's see how, right? So as usual, the pre-market analysis for tomorrow, December 29th, Wednesday 2021. We would be looking at all of these parameters that you see on the left side. Also, we'll have additional analysis based on all these parameters that you see on the right side. We would also have some wrap-up and some actionables for tomorrow. So, look at the charts. Right, left side, what you see is Nifty, and what do you have? That's a bullish kicker. It's very bullish, right? The kicker is a pro gap, a gap that is left behind when the market has a runaway gap on the upside. Bank Nifty also gapped up, but it could not sustain that basically, right? You can see that it closed red, but it still gained some points, right? And the thing is that this gap that you see on the Bank Nifty there still remains not closed yet. That's a big resistance for the Bank Nifty. Nifty, meanwhile, has closed above the 20 moving average and confidently moving upside. So what happened? It's a bullish kicker, pro gap, bullish kicker pattern. It's a pro gap, professional gap. It's right, and gained 147 points, almost 1% of move happened. And 17,200 was very crucial because it was the 20 moving average level and it has closed above that. Bank Nifty also gapped up, and then 126 points only it could gain because it could not sustain. But yeah, so that gap that is there at the 35,500 kind of levels is going to be very crucial for the Bank Nifty. Intraday, both of them gapped up, as we saw that, right? The only thing is, only Nifty could sustain, other Bank Nifty could not sustain, went flat after that. So intraday, this is what happened, right? Gapped up, Nifty, and then it caught the trend, and then it did a dip at in the afternoon, 2 o'clock. Dipped, but suddenly recovered back with the next right, 2 candles. You can see it recovered. But look at Bank Nifty. It capped up and then it gave up everything and then went back and then tried to again recover, but it could not further move up to the previous level. That's what happened. Weak Bank Nifty price action and a strong Nifty price action. Bollinger Bands, what does it say? Look at the Bollinger Band, lower bands. So this is clear bullishness. Look at the moving average median band, and this price is above that, close comfortably. This is super bullish with a gap. So this moving average is now a support, and after that you have a gap also support. So that can sustain. Bank Nifty, see, still the lower band is moving down, so expanding on the downside, bearish, and the gap from 35,500 till 34,400, that gap is still there for the last 7 days, 7 trading days, that this gap could not be covered. Well below the moving average, far away from the moving average, it's clearly bearishness, and this lower band is also indicating bearishness can continue. Now, support resistance level, make a note of this. The first resistance would be 17,200 and 17,300, maintaining that level. After that, you have resistance on the upside, 17,350, 400. After that, you have resistance on the upside, 17,500 to 17,600, which is very crucial, which is also a Fibonacci retracement 23 levels, and anything above that would be clear indication that the market is going to continue its rally on the upside. And on the Bank Nifty, you can see that it's resisting at 35,000 and 35,300, that area. That is the first resistance. Before jumping in there, let's look at the downside also on Nifty. So Nifty, the supports would be 1600 first, and then 16,700, 750, and then 16,550, 16,650, and after that 16,350, 16,450. That levels on the downside. Now Bank Nifty, the first resistance to be cleared is 35,000 and 35,300. Then above that you have 35,900 to clear, 600 900 that level. Then you have 36,000 Fibonacci 50 levels, 36,500 600 that has to be clear. Above that you have 36 900 to 37 100 that level has to be clear. Resistance on the upside. Downside you have the previous support swing low, that is 34 350, 34 300 and 34 750 that range, and then you have 34,100 that range below. If that breaks, you have 33,300 below that. So this is a bottom resistance on the bank nifty. Now this is momentum. Nifty continues to be on the sideways and moving up. Bank nifty, look at this, it's still not climbed into the bullish zones above. RSI 40 has not happened, it's still below that. That means bank nifty is still in the bearish zones in the short term, that is daily time. Medium term, both indices are sideways momentum. Now divergence, we have been speaking about a divergence that in both the indices. You can see that the momentum is rising up and the price is falling down. Price is falling down, momentum is rising up, both. And it is diluted because it is quite large number, but it is working perfectly, and almost it will meet the target if it goes and hits the 16,500 levels, right? So both the levels seems to be working, but the target is still work in progress, right? So that is momentum and it's a divergence. Trend indicators are showing that both indices has the short term ADX indicator is saying that it's DMI negative on Nifty as well as Bank Nifty, DMI negative, right? And the strength also seems to be rising. Although today it has taken a dip on Nifty, Bank Nifty, you can see that the strength, the green strength of the bearishness is increasing and rising up, right? But the medium term, it's anyway negative strength. The trend is the thing that has not changed in the bullish zones yet for neither Nifty nor Bank Nifty. That is the momentum is turned sideways at least on the Nifty. But Nifty, the trend is still negative, right? That's because it has made the lower high. Same thing is reflecting in the another indicator, that's all. Now India VIX fell 4% down, 16.47 it has dipped to, right? So that's what you see. Yesterday it had spiked up and then it has given up, spiked up around 6 to 7%, and then it has given up half of that today. 16.47, 16.21 is the implied volatility in the Nifty, and IB percentile is showing 46%. So basically it's maintaining the 50-20 level of the VIX volatility. Looking at the open interest analysis, this is what it shows. Overall it is bullishness that you can see because the put writing is dominating on the Nifty and Bank Nifty. Look at this, call writing is dominating. So that itself indicates some weakness in the open results also. There is 2 days for the monthly expiry, right? December 30th. And for that expiry, if you look at the levels, the highest put rating is in at 17,000. That's going to be the big support. If that breaks, then you have the highest rating that is seen at 16,500. And 18,000 is another 800 points away, and still that has got the highest resistance so far away. Right? And after that, you have the highest call rating at 70,500. And look at the put call ratio, it's 1.06 on the, this is clearly bullish. A long build up is what you saw on the futures open interest rate. The Bank Nifty, look at that levels, 35,000 highest put rating and 34,000 after that. Now the call rating is seen maximum at 35,500 and after that 36,000. A slight dip, dip in the bullishness can be seen at 0.93 put call ratio. But today also it was although it gave up and then hardly gained very few points, but it is a long build up that the futures open interest rate for the Bank Nifty also is showing. Look at this, it's green. The heavyweights move today. HDFC Bank, Infosys and Reliance, they moved, and then ITC also moved, right? So Lenti also moved. So that is what moved the market. Now sectorally, what happened? If you see IT, almost all of the sectors moved up, right? IT is Clearly bullish on the short term, clearly bullish on the medium term also. So it's time to pick up the stock. Today it moved 1%. Yesterday also it moved 1%, more than that. Other sectors, if you see metal moved up 1%, auto moved up 1.3%, pharma moved up 1%, FMCG moved nearly 1%, realty moved nearly 1%. So all of the other sectors moved, but the momentum on the daily or the short term is still sideways. So you'll have to wait for that to catch up before you can pick the stocks confidently from each of the sectors. Right? This is the most interesting thing of today. Institutional participation. If you see 28 December, you can see that there's 207 crores of buying that has happened by the Fyers on the cash segment, while domestic institutions, as usual, they bought but small, 567 crores. Now, this buying is happening after 30 trading days of continuous selling. This is the first time. This is also the first time in this December month, it's almost the end of the month, right? That we are seeing a green or a buying that is happening. Right. So, which is a good thing, but whether it will sustain or not, we'll have to look at the next days. Now, dollar, if you see, dollar has been losing its strength, right? Kind of consolidating on the dollar index. And interestingly, the USD INR currency pair has dipped, right? Almost 2 rupees, right? Today also it fell down. It has been falling down consistently big from the 77 levels. 2 rupees of fall. Now it is heading towards a 74 support zone, looks like, which is good. That the rupee is strengthening is good one way, right? So crude oil, on the other hand, is shooting up, right? It is made big up on the other, and then gone to the 76.5 levels, which is worrisome again. Remember, it had gone down to the 65 kind of level. So although crude, I don't know what is the interconnection between these two, the US dollar INR and crude oil is a connection or not, it's not clear. But when the dollar dipped, the currency pair dipped and rupee strengthened, and the crude oil prices shot. Right? It looks like it is this is a major resistance zone. Hope it does not go beyond the 76, 78 kind of levels back to the 85 levels that had happened last month, a few months back, like few weeks back basically. So this is what is that crude oil price is increasing, right? Now gold, we see, yeah, this is also interesting. Looks like so 3 or 4 times it has been attempted to take away this resistance on the top side, and this is the 4th time that this is attempting once again. So how do you know that it's attempting? You are seeing continuously the gold rising up. You can see 4 or 5 candles upside. So today also it is a green, so looks like it is heading towards this, right? So will it, this is a cup and handle pattern on a weekly basis. If you see this handle part is what is happening. So whether it will take out this resistance or not is what we have to look at. Now below what you see is the global markets, right? Yesterday you see that Dow Jones had moved 350 points up, which is substantial, but the market is not open today yet, and S&P 500 and Nasdaq and the FTSE, DAC, CAC, Chinese market, all of these are showing green as of now, but you will have to look at that the next tomorrow before the pre-market, and also if there is any big movements that's in here, obviously it will reflect in the SGX also. But Europe opens at 12:30, so you have to look at that time before you're taking any intraday trades, right? So as of now, there is a big green move that is seen in the Dow Jones as of yesterday, but today, as of now, everything is green and no big greens or no big reds as of now. That's what you have to check in the next day. Right, that's global markets and actionables too, both from the same sector. Tech Mahindra continues to be giving bullish signals. Its reason for that is because great momentum, great volume, great trend, and in a trend line parallel channel is moving heading up. Wipro same in trend line channel, great volumes, great momentum, and great trend on a short term. Both are short term swing trades, not intraday trades, right? So Techcom and Wipro both from the only bullish sector, which is IT sector as of now. This is another perspective on the Nifty and the Bank Nifty. See, yesterday, day before yesterday, we had a bearish engulfing pattern that engulfed the previous candle, and then yesterday we had a piercing pattern which was indicating a reversal, and today it gave a gap up, running gap, like it's a pro gap bullish kicker pattern that is formed now, and it is closed above the moving average, and you have the momentum also reasonably picking up. Look at Bank Nifty, you're seeing that it is stuck at a gap, momentum is bearish, right? Now let's wrap up. Cautious or mild bullishness or sideways combined. That's what my view is. Reasons: chart patterns, support levels, sideways momentum, bearish trend, still it's bearish on Nifty, right? Trend wise, ADX wise, we see, and the institutions, continuous selling since the last several months, right? Hardly any buying has happened even today. Fyers, if you see, it's few crores, right? The cash. So it's the fact that Nifty has made a good recovery of more, like 5% of recovery from the bottom has happened. It's showing bullish price patterns, but Nifty is not supporting its weak momentum and it's stuck at a gap, right? So that bearish torsional Bank Nifty, and also Nifty has not crossed the lower high, low pattern. So that will happen only at 17, 550, 600 that levels. Once that is crossed, then we can say that the view can be completely bullish again. So VIX, this is for the option selling based on volatility, is maintaining a 15-20 levels, right? Low volumes, last 2 days of the monthly expiry and also the yearly expiry, if you look at it that way. And so it is bound to be very volatile due to two reasons that I said. So very cautiously you have to play the game. Anything about 20 weeks, stay away from the market, right? Even otherwise it will be volatile. And it was V-shaped recovery yesterday. Today it was kind of trending, but Bank Nifty, it was kind of flat. So play safe. Now last point I repeat, because still we are very far away from the top, so still you can have stock picking for quality stocks from at a very reasonable price. Several stocks which have corrected substantially can be picked up for a long term and can be used as a collateral for option selling if you're doing that. Yeah, so short term opportunities could come up, right? Both in the buying and the option selling also it can give opportunities in case it is facing the resistance again at the channel top of 7600 near 500 that levels, and it can give good shorting opportunities also. But the only thing is it has to be strict stop loss or hedge positions that has to be kept with position sizing rules maintained. Right? Vertical bear spreads works well if you're going for short positions in case the market is reversing. Right? So that's a wrap up. It's a mild bullish, cautious bullishness is what combined with the sideways view until the 17500 600 band is crossed. That's what my view is, and if that helps you to frame your view and helps you in having a good trade plan for tomorrow, then consider hitting the like button, share to your friends and colleagues. Thank you so much for watching. Happy trading, happy learning. Bye.